let's take a greater look at what's going on in the gold sector with a number of companies providing updates. This as Fidelity International forecast that gold could hit $4,000 an ounce by the end of the year, or end of next year, in fact, it's saying, as the Federal Reserve lowers interest rates to cushion the US economy. The greenback drops and central banks keep expanding holdings. Well, Brian Chu is the founder of the Australian Gold Fund. He joins us again now. Brian, welcome back. Good to catch up with you. Let's begin with what we're seeing at the local level here with those listed companies. We are in the midst of those production updates. Have you got a general takeout of what you've seen at the moment?
Hi, Andrew. I'm really glad to be back. And what I've seen in the June quarter results so far is that things are, the companies are delivering results that are much better than what we saw compared to the March quarter, at least in terms of the quarterly production, the cash build, the operating margins. But what I thought was worth looking at is that these companies, the share price performance since the end of May, and the reason why I chose the end of May is because we saw gold approach an all-time high around this period, and so did these share prices. And in the past 2 months, I have mentioned when I appeared in these broadcasts that I found the gold producers were a bit overvalued. And as you can see, sorry about the color changes, there are some mistakes. It should be Pantoro at the top, rather like actually bouncing rather than Ramelius Resources. But that's okay. Hopefully you guys can forgive me for the color coding error. But the point I'm trying to make is gold hasn't really actually pulled back, and yet gold stocks, the ASX gold index is down by about 13%. And the larger gold producers like Northern Star, Evolution Mining, Regis Resources, Genesis Minerals, they're down about 20-25% from their highs. You would think that the results must have been disappointing, but at a closer look, I actually don't think that's been the problem. It's that perhaps the market's expectations on these companies were much higher, and they were willing to pay a higher price until they realized that that may not actually be that may not actually be the case when these companies release their results. So perhaps let's have a look at Evolution Mining, which we got the production and the sales for this year. Like you can see the history of Evolution Mining, the production, the levels are still at what we saw in 2020. It's still good results. The share price hit a record high of over $9 back in early June, and it's back down to $7.20. Now, if you look at the next graph, the operating margins, you'll see that Evolution Mining has been operating from strength to strength. It's actually delivering record operating cash flows. Now, what that tells me is that, well, gold, the companies benefited from gold's performance, and also the company has fixed up some of its operating performance, especially Red Lake Complex. I think that was the one which created the biggest headache for the company. It was a reason why Evolution Mining just trailed well behind Northern Star in the past two and a half years. So that's actually what I'm seeing, and we can cover a few more companies later, but I thought perhaps I'll just pass it back to you, Andrew, on answering your question.
Yeah, no, I mean, that's interesting what you're seeing there, particularly with Evolution, as you're saying, given that outperformance. Now, well, let's actually continue then, Brian, what you brought to us. Pantoro, talk us through this one.
Yeah, so Pantoro is one of the few companies among the producers that actually delivered, that actually the share price have gone up in the last 2 months. And there's a reason why. Pantoro started building the Central Norseman project back in 2022. It was a joint venture with Talos Resources, which it purchased in 2022. The company faced a lot of ramp up issues. It took a while for the mine to get back on track. The processing plant was also, there was just underperformance. The company was churning through cash. You had to raise, I think, about $200 million of cash and also sell some of its assets in the meantime. But have a look at that operating margin, just the last chart we got. The operating margin is at 56%, and that was actually quite impressive. The company is actually also looking to increase its production going forward, and it's going to expand its processing capacity, I think, from about 1.2 million tons per annum to as much as 1.7 million tons per annum in the coming 2 years. The market went ahead of itself a little bit when it traded at almost $4 in June, but afterwards, it actually, the company's delivering. The market's very happy with it. The all-in sustaining cost is $1,991, which allowed the company's operating margins to be almost 60%, its highest on record.
Yep.
We're even going back to 2016. So that's why the share price is ahead.
All right, we're running a bit short of time, so let's just skip through then. The next one, Ramelius. Talk us through what you're seeing here.
Okay, Ramelius Resources recently delivered a 301,000 ounce production for the year, and that exceeded the company's expectations of 290,000 to 300,000, which it upgraded. It also delivered record high operating margin. If you look at the next graph, I think it's about 65%. The company ended the year with almost $900 million. It will merge with Spartan Resources at the end of this month, and the company is set for a major growth trend. Again, market expected the company to do really well. The share price priced in that, pulled back, but it's back similar to where it is about a month ago. And the final one is Regis Resources. The company has actually seen its production come down significantly as a result of Jutin North basically winding down. And the company is taking the, I think it was Garden Well underground at Rosemont. Rosemont is taking it underground. Operating margins have actually improved thanks to the company closing its hedge books at the end of 2023, if I recall correctly. So the share price has actually pulled back quite a bit, and the company is building its cash pile. It decided not to go ahead with buying the Ravenswood project, Ravenswood mine from EMR Capital, and I think Regis Resources is probably looking elsewhere for growth. Maybe McPhillamys, but I'm thinking maybe another mine or a company. So keep your eye out. Thank you for watching my interview with Ausbiz. To learn more about our work, visit the Australian Gold Fund website. Also, check out Gold Hub Australia for live precious metals price quotes and insights. You can also sign up for our regular updates. And don't forget to visit the Ausbiz website. All our links are in the description. Please leave your comments and thoughts on where gold, silver, and the US dollar are heading below. Thank you very much. God bless.